The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and we're here to talk about how to maximize leverage, minimize risk, and be one step ahead of the markets. And it's been an interesting day. Had that big run-up early this morning, and then the market decided to do a little bit of pullback right there. Made for a great gap play, and I hope some of you got in on that. All the indices started moving on down. Russell shot down fast, and the other one's moving on down towards that. And let's see here. Let me go ahead and I'll pull some stuff up. We'll start checking it all out. All right, so I got it up right there. And looking at a couple more things, and we'll be all set to go. So right now, as far as the news, what came in last night, I'm going to pull it up for you. And we got several things that came in that sort of led to this little overnight rally we had. China had some really good numbers come in, growth 14% over this time last year. And so that was a very positive thing. And then Europe decided to go ahead and keep their interest rate the same, despite everything that's going on. And so that gave a little bit of rally to the euro early on. And then Britain also did the same thing with their minimum bid rate. And so that right there basically just gave the currency some strength, which of course hurt the dollar a little bit, helped the market rally, putting it all together. And the report last night came in. It was like we got the China trade balance came in at $31.6 billion, and they expected $20.1 billion. And that trade balance is the difference in the value between imported and exported goods from the previous month. And so that's good for their currency, which means bad for our currency. So you just put it all around, and bad for our currency means usually the markets, rise up. And so putting all that together, we got that really wraps up last night completely for you. The big important things. We also had asset purchase facility, and here we go. All right, and asset purchase facility came out of the British pound at $375 billion, exactly as expected. Not a big surprise, as it comes in at the exact same number every month. It's a big important number, but it's always the same. So I guess not always. Back in October of 2011, it wasn't. But it's usually the same. So if it's ever not, that's definitely something that you want to be watching out for. And the other thing, like I said, the bid rate came in at 0.5% for the British pound at 7 a.m., and the expectation was 0.5%. So that basically meeting just the expectations, then, there's nothing that, that important about it except for the fact that they did leave it there. And then 7:45, right after that, the minimum bid rate came out from Europe. And, again, they left it at 0.75%, which, again, also met the expectations. So that really wraps up the European side. Now, over in Canada, they came on out with building permits, and their building permits were a lot worse than expected. They expected them to come in at 2.4%, and what a building permit is, that's basically the change in the value of building permits issued over the previous month. So they didn't expect it to be as high. They actually came in at 15% last month, and they only expected 2.3%. But this literally reversed courses. It was over a 30% drop in building permits issued. And so, as you can imagine, that had quite a bit of impact overall on the markets. And let's see here. Let me start pulling up some charts and show you some fun stuff here. And right there, we got it. And let's see. We also had the ECB press conference. And they come out and Draghi come out and explain why they leave the bid rate the same and all that, et cetera stuff. But then unemployment claims came out. And they came in much worse than expected. They were expected to be at 356,000 right here in the United States. And they came in at 377,000. 371,000. And also, I want to say they may have even revised the last number. Yeah, they actually revised the last number to make it a little bit better. They revised it from 372 down to 367. But still, seeing that big uptick was a negative thing for the markets. The markets did rally a little bit on it to begin with, but then they decided to go ahead and wake up and say, you know what, maybe things aren't all that well. Maybe it's a bit like 2007. And so we'll see if everybody wakes up across the board. We also had natural gas come in at negative 201 billion British thermal, or negative 201 British thermal units, and they expect that to be negative 185 British thermal units. And so basically what that means is less supply, and we all know what that means. So usually, driving the market price up there, and I'll be opening that up here in a minute when I get the charts on the screen for you. And we'll pull up. Let's go ahead and put up natural gas right now, and put that on up there. And so when the report came out, we had a sort of an odd spike. The supply, dropped, and you had this little, basically head fake. It really should not. When the supply is going down, then you think it would just stay up. But it did decide to go ahead and pull back down by the end of the day from where that was at earlier. But it gave you two chances, and I've talked about this a lot on the natural gas and the oil inventory report. Sometimes you'll get two chances, and if you see that, then that's great. So what I'm trying to say here is natural gas, there was basically less inventory. They thought there'd be a drop from the previous week's inventory of 185 British thermal units, and it came in at negative 201 British thermal units. So you're talking about 16 British thermal unit difference. So when that comes down like that, the price should go up. It does. It spiked up. But then you got a second chance for an entry, and that's when it dropped on down before moving on back up, basically that same price level. And so you could have been playing like binaries or spreads. It's really, really dangerous to hop in on natural gas around this report if you're trading the actual futures market, because, it can just fly against you. And it can keep going. And but of course, with the spreads, with the binaries, you don't have to worry about that. And you can actually go in and you have limited risk. You can trade the natural gas spreads just like you're trading the underlying, or you can go in and trade the binaries, picking a strike, usually somewhere around where the peak was, and then getting out when it gets back to that peak. So you don't want to hold on to it, and you can see why as it pulls on back down. And let's see here. Look at a couple other things. We'll go in and look at just the effect on the currency pairs right here. So euro dollar, so they left that bid rate in, and it's pretty much stayed strong. So the dollar getting weaker the entire time, and just having all sorts of mixed signals coming out of the market. But when they made that announcement, let's see, it came out officially at 7:45, which would have been, let's see here, 6:45 my time. And right here, so you see a little bit of a spike, and then it just keeps going. This big move happened closer to the press conference that happened at basically 7:30 Central, 8:30 Eastern by Draghi. And you can just see it starts moving on up, and been up ever since there. And it's pretty amazing. That the euro keeps rallying in the midst of everything. The Social Security fund in Spain is now negative because they've been using it to buy their own bonds. Yeah, that's nice, isn't it? People want to retire, and there's no money there. Who's going to pay for it? I don't think the Germans want to pay for the Social Security benefits of those in Spain. And so it's getting messier and messier. They're pushing this thing off, and eventually it's just going to tip over. Looking on over at the pound dollar. Pound, same thing. They left that bank right there. Announcement came out at 7, so 6 o'clock Central. And when they left it out, you really didn't see just the massive move you'd think you'd see on that. But again, not a massive surprise because everybody expected them to leave it the same. But anyways, that's not raising the rate or not lowering the rate is still good for the currency. So they're not devaluing it by going in and basically paying less interest. So there's less reason to hold it. And so the currency went on up as well. And so you put all that together, it just made for a very interesting night. And then you go in and pull over and you look at the S&P. And let me hop on over here. And you can see those that gap right there. Just came in, right in, just filled it perfectly. And you might even go and just scroll through them real quick. You got the Dow, boom, perfect gap fill. You have the Nasdaq, which went ahead and definitely filled that gap in. And the Russell, it just shot down and filled in the gap and then some. All right, well, stay right there, folks. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, well, welcome on back here to the Diagnostic Trading Hour. And we're going into just, several things, looking at the markets overall, and we just wrapped up the fundamentals for the day. And I'm just seeing what else we got. We got a couple FOMC. We got the natural gas storage. We talked about that one already. FOMC members are speaking. We got one that started speaking at 1:10. Another one speaking at 2 o'clock. These aren't major speeches so much as they're just, basically speeches that they're doing. FOMC member George, Esther George out of Kansas City, is talking right now about the economic outlook at the Central Exchange. He's in Kansas City. And Q&A is open. And then also, let's see, we got James Bullard out of the St. Louis FOMC, or Federal Reserve, and he's due to speak about the monetary policy and the economic outlook. And he's going to be speaking at the luncheon there in Madison, and also Q&A. So if anything interesting or insightful comes out of that, that could have a little bit of a market impact. And let's see here. Later tonight, trades to watch out for. We got the yen current account coming out. And as you probably know, if you look at Forex at all, the yen has been crazy lately. And so this really gives you some very cool opportunities on everything. The market's basically just jumping like crazy on every little news announcement. You get all these big moves, and that's been pulling right back up there. We even pull back over the daily bars. You can just look at these massive highs. We can just even back on out even further. And you can see it's been a while since it's been there. But for the week, it's basically back up at last week's high right now, which was a major resistance level. And we can even go back a little bit further and sort of see, it has plenty of room to rise. Sometimes when you're, sitting there and you're looking at those, smaller charts, you're thinking, man, that's it. But it definitely is a resistance point. Right here, we had a major resistance support level. But it has plenty of room to be able to move on up, and it could just start a big, long trend of yen weakness, which I would not be completely surprised of, considering the continuing weak monetary policy. I think they're on like QE 20 or something right now, and the people that they've recently elected and put into office are just going to perpetuate that even further. But again, 6:50 tonight, and you can check that out. Possible ways to trade that. There's a lot of different ways you can trade it. Make sure you hop on over right now to tfnn.com. You can click on the Nadex banner, open yourself a Nadex account, and right there, and just get a demo account to start out. And right there, demo account, they'll put $25,000 of funny money in there. You can get going right away to see how it works. And put in your username, first name, last name, phone, email address, click apply for demo, and they'll get you going. You create an account. It's only $100 to fund it, and you can trade binaries and spreads and different things like that. And of course, I'll have the diagnostic box spread analyzer. I also have the deviation levels and the education on the spreads and binaries that you can take advantage of with a 2-week free trial right there on TFNN. And I want to go ahead and look right now at Nadex and just check out, like I said, different ways that this could be traded. And I'll log in right here. And we'll just, I just want to, obviously I can't bring up the trades now because they won't open until 6. But what I can do is show you, just the idea behind what we're looking at. And so, going in here and pulling this up, and then we'll go over here to the U.S. yen. And then right there on the U.S. yen, you'll see that there's daily binaries. So that's one that you're going to see starting at 6 o'clock. That's when they open up. And, you could also do euro yen. It's been moving like crazy. But, I like U.S. yen. But there's a lot of advantages to different pairs. So euro yen is actually going to be a little more volatile. U.S. yen is going to have tighter strikes. So it all depends upon how you want to play it. But you can go in here. You can put a straddle on. You can let the report come out. You can play it. One of the best things to do is look at news reports when they come out, and then go back and look at the historical date when it was released and how did the market react when it was positive, how did it react when it was negative, how big of a move was it. And that gives you not only an idea for a potential trading plan, but it also gives you the idea sort of, what you might want to expect based on what comes out. So when this comes out, does it usually go one place before it goes another? And, just basically how does it work? And so you want to be able to look at the history of that trade. And that's one of the reasons I say hop over to a demo account, try it out to see how it works. And, it's a lot of fun to trade. You can trade news reports, which are really crazy to trade if you're just trading outright Forex or futures. So, you can check that out. And let's see, what else? Do we have anything else tonight? We're going to have some more China report CPIs coming out of China tonight. And you can check that one out over on their website. And let's see here. Right there, so stats.gov.cn, and they'll have the statistical data that they'll release that information tonight. So that could also be a market-moving event tonight. So just be aware of that for overnight trades, that can have a significant impact on the market as a whole, especially based on like what just happened this night. And then tomorrow, to make sure you're ready for that, we got CPI coming out of the U.S. franc. So coming out of Switzerland there, and that'll come out at 3:15 a.m. We come back, we'll talk about the other reports, so that way you have your trading plan in place for tomorrow. We'll go over a market wrap, talk about some deviation levels, and answer any questions you have. Feel free to call in right now. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And going on in here and looking at what we got for tomorrow so that way you have your trading plan in place. And like I was talking about yesterday on the show, you need to make sure you do sit down and map out your week, map out each day. Look at what fundamental reports are coming up. At the end, you trade the charts, okay? But you got to be aware of, things that happen, right? I mean, just think about it. When you're driving, you follow the rules, right? When it's green, you go. When it's red, you stop. But it doesn't mean you don't look to see if somebody's running the red light, because you could be right, but you could be dead right, okay? So you always want to be able to look both ways for crossing the street. That's what the fundamental reports are about. They give you that heads up. Also, they help you out a little bit with the why. the why is good for just understanding it. It doesn't really mean anything as far as going forward, unless it's something that's very consistent, like oil inventory or natural gas inventory. That'll give you a little more why that can be helpful, like that second entry we were talking about earlier. So what else do we got? We got the manufacturing production coming out of the British pound, and they're expecting that to be at 0.6%. That's usually a decent market mover for a decent trade right there. And then out of Canada, and actually in the U.S. here, we're actually going to have 3 reports come out at the same time, which helps out with a little volatility there on the U.S. Canadian. Not as big as last week, but I'll still get some decent volatility. And the nice thing about this is it's a double trade balance report, meaning the United States and Canada are both going to be releasing their trade balance report at the exact same time. And again, that's the difference between imported and exported goods. So basically a positive number means that more goods were exported than imported. Okay? And a negative number, opposite of that. Canadians usually export, or about 65% of Canadian exports are purchased by the United States. So that's why it has such a big impact in the United States. And then here in the U.S., of course, the same thing, but it's not 60% in Canada. But you still want to be able to look at that number. You have 2 export numbers on a cross currency coming out that you can take advantage, not necessarily cross, but a U.S.-based currency, U.S. Canadian, where you can go in, you can straddle it, you can trade directionally, whatever you want to do. If both reports, like if one's positive for the U.S. and negative for Canada, well then, you know what? You're going to buy U.S. Canadian. If it's negative for Canada, or if it's positive for Canada and negative for the U.S., well then you can sell U.S. Canadian. Or you can just go in and straddle it with a spread, or you can strangle it with binaries. So straddles where you have the same strikes, and a strangles where you have 2 different strikes. And to help you out with the strikes, you can hop on over and check out that diagnostic numbers there where we have the box spread scanner, and you can log in there and check out the spread scanner. You can just go in here and you just pull up, U.S. Canadians, what you want to trade, and you say buy and sell. You can say, I want a risk reward of 2 to 1. I don't want to risk more than $100 on each side, and there you go. You can buy and sell, buy and sell. So it basically gives you the perfect report right there, and with a very, very low risk. So like right now, I could do a strangle for $10 on U.S. Canadian. So there's a lot of good trades that you can check out, and I really like trading the spreads on the currencies, especially over on Nadex, and they're becoming some of my favorites for the spread trading. And I also like a few of the indices and the ags. So those are probably the ones I focus on most when trading the spreads. And starting to get a little bit more into energies and metals. So I'm trading a lot more on binaries, but I'm starting to get into them quite a bit. And it's just a matter of putting all the pieces together. But the currencies are just, the premium's so small, meaning like a pip. Okay, it has to move 1 pip to be break even. So you're really not you're basically trading on par with the FX pair, but you're only using like $5 or $10 to do it. So instead of putting up a couple $100 or $100 or whatever, you're barely putting up anything to do the trade, and you can't get stopped out of the trade. So it's a perfect combination. All right, so let's go ahead and check out the markets. Do a quick market wrap, see where everything's sitting at right now. We got the S&P up 5 points right now, bouncing back off that gap fill. We got the NASDAQ up a point. We got the Dow up 38. The Russell is still in negative territory, down 1.5 points. We got gold up 21. And copper right now is up 1%, with silver up 2%. So silver leading the day right now. And looking on over, we got corn. It's up a few points, and soybeans down a few, with oil up 81 cents, which is, 81 cents sounds small. That's $10 a cent. Okay, it's $810. And walking on over, now got natural gas. It's up nearly 2%, no surprise. So especially on an inventory day report, and natural gas likes to move lately between 1 and 4% on a regular basis. Looking on over at the euro dollar, it is up right now 194 pips. That's right, 194 pips today. Pound dollar up 126 pips. Aussie dollar up 73 pips. US yen up 32 pips. US Canadian is down 14, and US franc is down 121. So down 121 pips on the day right there. Obviously putting that dollar index futures right there into negative territory. And but really interesting, this massive negative dollar market really not totally lining up with that. And just the way the metals and the VIX and everything has been lining up, it's been pretty crazy. We've been having lower close days and lower close VIXs a couple days in a row, and that usually precedes a pretty big drop in the market. It has the last few times it's happened, just in the last year. So I'm looking for a nice drop, and we had a little bit of that this morning when we got that drop, but it didn't quite stay down, not quite yet. And we got the fiscal cliff coming, and we got earnings season. So I mean, welcome to trading. This is going to be a fun quarter. That's all I got to say. I mean, don't get caught up in the politics, okay? We can have fun. We can talk about them. But when you're at your desk and you're trading, it's about what's on the chart and making the money. And all the earnings and all the volatility and all the political, et cetera. I mean, you need to know about it just because it affects the markets. But it means the market's going to move. And we want the market to move. So it's nothing worse than just a flat, boring market. And you can make money in flat markets. You can make money on Nadex on flat markets, but it's a whole lot easier and a whole lot more fun to make it when it's moving. All right, so let's go ahead and check out a few other things. One of the things I always talk about, we talked about fundamentals, got a little market wrap there. And one of the things I like to make sure that I do cover with you every day is to go through the deviation levels and put those up right here. And we go in and basically just hitting every level, talking about what the levels mean and what they do for you. And the levels basically come down to implied volatility. Okay, implied volatility is the expected move by the market built into options price. And so we take out that implied volatility, and then we go in and we put that into a simple, or not really simple, a one-day intraday deviation formula that helps you basically say how far did the market say the market's going to move. And when you do that, then helps out a lot. And hey, let's go right now over to New York. We got Richard there. A question about the pound dollar?
Yes, hi there. How would you place your trade on the pound dollar anticipation of the move from the overnight news?
All right, so let's see what we got going on for tonight. Let me pull that back up, okay? We don't have anything tonight. For tomorrow, pulling that back up. So for the manufacturing production report that's coming out?
Well, actually, the previous night wasn't the news for the pound dollar last night.
Basically, what you're going to do on that is the expectation was that they were going to leave the interest rate the same. I mean, nobody really expected Britain to go in and lower their interest rate right now. And if they lower their interest rate, that means more people are going to dump the currency because they're not getting for the carry, the interest, they're not getting it. Okay, so it makes the currency go down. If they leave it there, that is a sign of strength. So that would basically be buy that.
When you say the currency, be specific. Which one are you talking about? Which one would they dump?
They dump the pound.
Okay.
So because they go, you know what, this currency isn't paying as well. I'm just going to hop on over and check out like Aussie, or I'm going to check out Euro or whatever. And so basically, just whenever you lower the interest rate in a currency, there's less value in having the currency. Sort of like there's no value in having bonds right now in the U.S. because there's pretty much no interest. So pardon me. So that expectation means I should expect the pound to go up, okay? Because I should expect them to leave it there, which further solidifies the strength of the pound. And the same thing on the euro, which would just further, of course, accelerate the pound. And it did. Whenever Draghi came out and talked, it basically pushed both of them higher. And so the best way to play that, if you're playing that at night, I mean, it comes out at 4:30 or whatever. But the big reports, just let's see here. Let me pull up the exact time.
In your view, Darrell, what made the dollar drop so much today? The
Treasury buying 60, or Bernanke buying 60 million in Treasuries.
Well, isn't that old news?
It is, but it still got to work through the system. So the biggest thing would be the interest rates on the two currencies. So, and then also the China news that came out basically saying that they're improving. So that was probably the biggest impact overall. Now, it didn't come out till later, though. So, I mean, if you're looking at the charts, you're going to see China's trade balance report, let's see here, came out at, until like 9, it was like 9 o'clock at night. So you didn't see a big impact on that. But, the world's asleep. Europe wakes up as soon as it wakes up, okay, before anything really major comes out. All of a sudden, you see the pound start to rise. The dollar's getting weaker. Okay, so this is before it now, and also they expect the interest rate to stay the same. So it's like the combination of the positive trade balance for China, okay, and basically meaning people are going to dump dollars and buy equities because that means stimulus, okay, like not stimulus in the sense of like the Fed, but just stimulus itself. But the combination, basically, the trade balance being really, really good on the China report, and then also the combination of expecting the pound and the euro to leave their interest rates the same, further strengthening them versus weakening them. All that combined led to those currencies being strengthened, which led to the dollar's devaluation. It was more about all the other ones getting strengthened than simply about the dollar being devalued. But it didn't help at all with all the, the bond purchasing and knowing that we're going to have an additional $45 billion on top of that happening every month, or $45 million, might as well be billion, happening every month out of the Federal Reserve.
How did you place your trades in anticipation of the dollar getting weaker?
I went in, and you can basically, you can do it at night, or you can do it however you want to, but I go and I look at the deviations. So I went in and checked out the deviations on the pound dollar, and you can go up to one deviation. You should expect a pretty good move when you have interest rate reports, okay?
Right.
So 1.6088 would have been the deviation move on pound dollar. And so I'll pull up, let's see here, let me pull a chart up on that. And you can actually see how the binary moved. So sort of one of the nice things I like, it's really good for also learning on Nadex, is you can go in here and we'll grab pound dollar. These dailies were trading last night. They started at 6 o'clock, okay? And
Right.
So before any of this news came out. And you're going for 1.6088, so you go in here, okay, here's the closest strike you're going to get to that. That's where you expect it to get to.
Right.
And so we got 1.60, open that up. And then, I like to wait as long as I can, closer to midnight, replacing the trade. I like to trade on my phone. So sometimes I'll place trades in the morning before I get to bed on my phone. But
Right.
the reason I want to, wait is because I don't want to pay, basically the binary is going to get cheaper as time goes by. Okay?
Right.
And, sometimes there can be more value in there than I want to pay. But, if you look right here, right around midnight, you're getting the thing really cheap, like $10. Okay?
Right.
And now, I'm not necessarily going to wait until it gets all the way up here to, $100 in profit. I don't think that's the best way to trade binaries. I think the best way to do it is go, okay, what's my target? 1.0688. So basically, when this thing gets to $50, I'm getting out. So what you would have done is you would have went in and you would have placed an order. This is a demo right here. Okay, so make sure nobody's following along. So I put an order on there, and so I'd place that order, and then it'd be under my working orders, or I'm sorry, my open positions. There we go. And then just click on the green arrow right there, right next to it, and then I place it opens the ticket in the opposite direction. See how it's sell now? I bought it. And I put an order into sell. Hit place order, and now that's working overnight for me. So as soon as it gets up to one, and that's the one thing you can count on, and this is a big thing I try to teach people all the time. There's 3 prices you can always count on a binary, okay? One is it's going to be worth either 0 or $100 at expiration. So that's 2 of them, I guess. All right? And the third one is when the underlying market, like the pound dollar, is trading at the same price level as the binary strike, the value of the binary is going to be right around $50, give or take $5 with, spread and all that stuff. So if I know that, now I don't know what it's going to be worth, like, if it's 10 pips away, 5 minutes before expiration. But I do know if it's at the same price, it's going to be right at $50. And so I like to go in and buy and then get out when it gets there, because I can set my order and walk away. So you can put this order on, before you go to bed at night and get filled, boom, put it on for $10 on the trade, and then walk away and, wake up in the morning, hopefully, and, have a nice profit. But you don't wait, like, you're not going to bed at night worrying, and it hit that literally right before the market opened, closed the trade out. And, but you're not going to bed at night worrying about losing a lot of money. You don't have to worry about managing your position. You have a plan. You're sticking to your plan. You have great risk management. You're risking $10 to make 40. That's a 400% return that you made while you slept. And it took you 3 minutes to place the trade. So the biggest thing is you need to have some way to realistically expect how far the market's going to move. So, and that, because binaries are statistics. If you think, that's going to have a massive impact right there. It's knowing your statistics and trading, and that's really what, like I did with the implied deviations. I automate that process because I need to know them. So I need these for my binaries. But hey, Richard, I appreciate you calling in, and feel free to call back with any more questions that you have. All right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just going over some things here with Richard. Richard, you back on the line with us?
Yes, I'm back. I apologize. I lost you for a second. If I could just fire off two questions here before I know your time's coming up. Number one, what is your website where you find the major currency announcements? And number two, how do I access your archives of your past shows? I go to the TFN, and I can get the other channels, but I can't get yours. Okay. And how can I do that mobily also? Because I can't bring them up on mobily. Okay.
Let's see here. Well, one, you do have our number, so make sure you call in if this doesn't work for you. So let me answer a couple questions for you. First one of the websites I like to go to is Forex Factory. What I like about it is you can see, and they list a lot of the news announcements right here. They rate them for you, give you information about them. What I like about it is you can see like the historical graphs on the reports, and you can also go in and you can pull up the historical information, the expectation, the actual, and then you can go in and even get what's called a seismic quake index, which is what currency pair does that announcement affect most. So that's one of the first places I would definitely, if you're looking for those kinds of reports, to check out.
What's the name of that website?
It's forexfactory.com.
Okay.
It's basically just a big blog, that focuses on Forex.
But they wouldn't have announcements of like China productivity and GDP, et cetera. Like what came out, they would have that also.
Yeah, it's right on as soon as you hit the page, you're going to see it. Yep.
And also in terms of graphs, in terms of the net result of the announcement.
They're just going to show you forecast and actual. But yeah.
Okay.
Now it does get overloaded. Okay, so like right when the announcement comes out, it's going to be slow. So like, it may not give you their update for like a couple minutes because so many people are on the website at one time. But at least you know what the expectation is, and you can also get the link on where the report's at and stuff like that. So that's one of the sites I use. I use a bunch of different ones, but that's one of the easy, quick ones to go to that's free.
Well, also, in your opinion, if the DX is down almost a point, why is the Russell down?
Why is the Russell down? Small caps, man, are getting slammed. I'm surprised everything's not down, to tell you the truth. So I think it should all be down a lot more than it is right now. Let's see here. But, they're not going to be 100% correlated. And, you always want to keep that in mind on any of the trades that you're doing is, don't look for that perfect correlation every time. Russell was heading down like before anything was heading down this morning. I mean, it literally just beat everything to the punch. This is the gap right here. It opened right here. And within 15 minutes, not even 15 minutes, like 10 minutes, it was already filled.
What's
the other ones? What's that?
What was the catalyst for that, do you think?
It's a gap fill. And, if you go and you look at several things, one is probably the number one thing, you say the unemployment claims. If you just want to go for a reasoning behind it. But the VIX has just been being skewed off of where all the markets are at right now, where the futures are at. And, it's like a couple days, like I talked about a couple days ago, it's been down and then the market's down. Well, the VIX shouldn't be down when the market's down. And that's a very bearish indicator. And so you had this big rally, and the dollar's getting pummeled. That makes sense to a certain point, and then all of a sudden, everything falls down. But I can't always tell you the why. I can get about as close as I can to my interpretation. And usually, sometimes I can tell you the details, but at the end of the day, it's really just follow it. I saw the gap, and I took the gap immediately. So this morning.
Okay, if you could possibly post on your website how to access the archives of your show mobilely, like on a BlackBerry. I don't use an iPhone, and also on the website itself. I haven't been able. Months ago or weeks ago, I was able to access the archives, but not recently.
Yeah, we have the podcast right here, right under radio, and you ought to be able to see archive shows right here. So Diagnostic Trading Hour.
Yeah, but it doesn't work.
Okay, well, we'll definitely check into that.
Okay.
All right. Hey, man, thanks for calling in. You bet.
Absolutely. Thanks.
Bye.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.